This is Matt from Speak Straight Mortgage. I'm a lender. I'm also Leah's husband. I'm going to break down this blog post of closing costs, things that I think are important that you should be aware of. Also, I'm going to break down the closing costs that you need to pay up front versus what's financed at the end of the loan. So this article is broken down into buyer and seller costs. We're going to focus on buyer costs, and I'm going to add one fee in here that's not itemized, the earnest money. So when you put a property under contract, that would mean if you let's say you go from looking at houses online to you find an agent, you find a house you want, you put it in an offer, there's something called earnest money, which if they accept your offer, in Colorado, it's generally 1% of the purchase price. So the purchase is $500,000. Earnest money is 1% of that. That's what earnest money is. You have to pay that up front. Same thing so as a timeline, you put the property under contract, you pay earnest money. The next step, generally speaking, is an inspection where you send an inspector to see if there's anything wrong with the house. That's generally $300 to $500 in Colorado. It depends on what tests all you have done. For example, radon, sewer scope. Those are things you could or you don't necessarily need, but that's what kind of includes in the range depending on the tests you're having done. After the inspection, there's the appraisal. What an appraisal is the lender has to send somebody out to see what the house is worth so that they know if they can lend money on it. An appraisal in Colorado is between $600 and $850 in most cases. And some lenders charge that up front. At Speak Straight Mortgage, we generally don't, but in the end, you pay for it at closing. Now, going through other items on this list, this is what I would want to focus on. Is origination fee and discount points. So if your aim is to know how to compare one place to the next or one lender to the next as far as closing costs, those two things fall into Section A of a loan estimate. So if I go down to here where we're going into more detail on what fees are, I included a link to a video I've made about comparing Section A fees. If you've never seen a loan estimate, that may not mean anything to you what Section A is, but if you want a clear understanding of if you want to understand the mortgage process, it's important to understand what a loan estimate looks like. This video will go over in more detail how to read a loan estimate and how these two fees play into that loan estimate. And like I said before, these are Section A fees, which are basically what the lender is charging for the rate. And the most important thing to be aware of if you're comparing lenders. Because everything else on this list, for the most part, is going to be the same from one lender to the next. I'll still go over what they are, but again, Section A fees, which origination fee and discount points are both part of Section A. Mortgage lenders, it seems like they like to muddy the water, at least especially ones that are expensive, because they could say, for example, when you're starting to learn about closing costs, they could say, well, it doesn't have any discount points, but they're charging it as an origination fee. Or it doesn't have any origination fee, but they're charging it as discount points. In either case, these are in Section A, and if you click this video link, I go over what specifically to look at, because it doesn't matter if you call it discount points or if you call it an origination fee, it's part of the cost of the rate. Next, PMI, private mortgage insurance. So when you don't put 20% down on a conventional loan, it's called private mortgage insurance. When you don't put 20% down on an FHA loan, it's called mortgage insurance premium. Either way, the terminology itself isn't that important. It's just amount that you pay for not putting 20% down. Title insurance. So when you close on a house in Colorado, the seller picks the title company in most cases. So the important thing to know, if the seller's picking the title company, you're paying the same amount no matter what lender you're using. So if your aim is just to understand what costs will be, this is somewhere title insurance and settlement fees. If you combine them both in Colorado are about $1,300 on a purchase, what the buyer actually pays. But it doesn't change from one lender to the next. So if your aim is just to understand what the cost is, that's about what it costs. If your aim is to try to compare one loan estimate to the next, in the end, it's going to be the same. Homeowners insurance, when you close on a house, there's something called an escrow account. In an escrow account, homeowners insurance and property tax is collected. So when you make a mortgage payment, it's paying both homeowners insurance and property tax. When you close, homeowners insurance is prepaid for 1 year. There's also money set aside for tax. So that's part of closing costs. HOA, Homeowners Association. Most or all condos and townhouses have an HOA. Some of them have a transfer fee, and most make you pay 1 or 2 payments upfront at closing. So that will vary by property, depending on what the HOA actually is. There can be a big range from, let's say, $100 a month to $700 a month. So it's important to be aware of when you're looking at properties, not just looking at the purchase price, but looking at what HOA costs also. Same thing with property tax. Property tax is in Colorado especially, and more especially in the Denver area, depends on where you're buying, because there's areas called metro districts, and this is mostly where new construction is. It's basically like an extra tax that they have to create the infrastructure. So, for example, if you buy a house in Adams County in the Reunion area, property tax is 1.6%. If you buy it in an old area, it's somewhere around 0.52. So triple the cost to live in one area versus another. I'm not saying it's not worth it. There's reasons why you would or wouldn't pick one or the other, but it changes based on property. And you also prepay part of this upfront at closing to fund the escrow account. Seller's closing costs, I'm not going to go into detail on because I'm mainly focused on what buyer costs are in this video anyway. So that's kind of an overview. I know that's a lot of information. But if you want one-on-one, if you want to go over what all those things are, if you have any questions, let me know. I can go over what they are, how we can potentially mitigate that cost by getting the seller to pay, and what situations that could happen in. But hoping you're having a great day. Hope that helps explain closing costs